Welcome to ChinaSecurities.com and Chinese Stocks TV, a daily, fast-paced, edgy show, bringing the best press release of the Chinese small and mid-cap space every morning out the open so you can hopefully profit from them and maybe find your next great Chinese investment. It's Friday, September the 9th. I've only got one press release for you. Not a surprise. We're still in Labor Day week, and it's a Friday. But I do got a great one for you. It's out of China Green Agriculture, CGA, and the New York Stock Exchange. They put out their fiscal 2011 numbers, and they've given us guidance for 2012. This is a producer and distributor of fertilizers in the PRC. I like this. That's a great business to be in. Staple product in a growing company. Here are the highlights. Revenues up 245% to 179.7. Let's call it $180 million. That beats guidance. Net income increased 54.5% to $32.9 million. Earnings per share, $1.27. Now that's significant because the company closed yesterday at $4.42. That means they're trading about 3.5 times earnings, which is ridiculously cheap, as I've told you time and time again here. However, the news of the day is they're up 84 cents right now to $5.26. That's 19% on 327,000 shares. The market obviously loves the news, but even at this price, the company's trading at somewhere around pretty close to 4 times earnings, give or take. That's pretty cheap considering you got a company that's growing top line by 245% and bottom line by 55%. Now, I know that China has its credibility issues and there are reverse merger problems. And as I've said, once the dust settles and we know we finally weeded out the reverse merger frauds versus the legitimate companies out there, there's going to be a lot of money to be made. I'm adding China Green Agriculture to my cheap China list. I'm keeping a close eye on it. And here's especially another reason why they've given us guidance for revenue, net income, and earnings per share 2012. To talk about revenue coming in at $210 million. That would be about a $30 million improvement over what they did this year. Net income, they're expecting about $37 million. That would be about a 10% move, just a little more, maybe 12% move over what they did this year. And earnings per share, they're expecting to come in at $1.38. Beating this year's $1.27. So overall, some pretty great value here. You've got to do your due diligence. You've got to make sure it's not part of the reverse merger fraud scene. But like I've said, there are babies being thrown out the bathwater. I'm tracking these on our blog and our cheap China label here. You've got to watch these companies. And that's a wrap. Have a great day. Have a great weekend. See you on Monday.